Property investment, if done right, can be incredibly lucrative. But here's what we need to focus on when we're looking to consider investing in property. It's all about buying right in the first place. It's all about de-risking a potential investment. Because there's so many different investment classes that you could get involved in. And think about it for a second. We need to be looking at ways that we can invest our money to produce a greater return, so that we're not always relying on our working income. Because the game plan is to hopefully retire a lot earlier, to have more money, to be able to live life in their own terms, to be able to enjoy doing the finer things and go on more holidays and have a family and not be stressed about money. So with that said, we need to start thinking about where we can put our money in order to invest it to produce an income. And the safest investment you could possibly make is investing in hard assets, real estate, property. But it needs to be done right, because there's many horror stories out there of people who have invested incorrectly and it's cost them money. But property is all about getting the fundamentals. Let's talk about a few of those. It's about buying property at the right price. It's about buying property that's cash flow. And ideally buying property where value can be added. Think about it. If you just break it down to those three things, and if you do those three right, then you're going to make money. But so many people, they don't do those as the fundamentals. They think they're getting a great deal because they buy it at an auction and they think they got the deal, but the refurb costs way more than the first thought because there's underlying issues about the property. That there is not de-risking the investment. There's many people who have not had accurate numbers around the refurb costs and overpaid for something. If you're overpaying for property and there's not enough value to be added, then you're breaking the fundamental rules. So we need to go back to the fundamentals. So can you buy a property at discount? Because if you buy a property at discount, then straight away you're already going to be up as such. So if you've got a property that's worth 100,000 as an example, can you buy that for 80,000? If so, that's a 20% discount. Now, the discount is not as essential as the value add, because I've bought property at market value or over market value. And you might think, well, Paul, you're telling us about buying below market value. But the reason I was able to do that is because I knew I could add so much more value by adding an extra bedroom or 2 bedrooms, or doing a loft conversion or a basement conversion or an extension that substantially added more value to that property. So again, it's just knowing the numbers, but generally the bigger the discount, the better the deal. Can you add value? That's why you should be looking to buy property that's walk-in condition, because there's no value to be added there. And there's no point, for that sense there, is buying a property where it's just a light refurb, because that's not going to add enough value to. You want messy properties, you want properties in a wreck, but you need to know the numbers and understand what the cost of the refurb will be. Remember, when you're going to invest, there's 4 different acquisition costs. There's the deposit, which is normally 25% of the purchase price. Then there's the refurb costs, there's the legal costs, and then there's your additional dwelling supplement or stamp duty. That's the 4 things you need to factor in. So think about it. It's not like investing in stocks and shares or crypto, or put your money into something else that you've got no idea whether it's going to pay off or not. You don't know if it's going to go up or go down. It's all down to market sentiment and what's going on in the world that helps the volatility and the fluctuations on the markets. No, in property it's simple. What's my 4 costs that I need? What am I going to pay for that? Well, if I'm going to pay 100, then I know I've got a 25% deposit to put down, which is 25k. So that ticks 1 box for certainty. Okay, what's the cost of a refurb? Well, wouldn't it make sense to break down the cost of the refurb so you know what the cost of the kitchen, the bathroom, the boiler, the windows, the paint, decorating, the electrics, all the things that need to get done in the house, pricing that up. You can go through a bit of a due diligence process there, get a builder out to help you and steer you with the costs and the standard of finish and the specifications required to give you cost certainty before you buy the property. So it means you've got the deposit, you know the numbers, you've got the refurb, you know those two, the legals. It's going to be around about £1,000 or there or thereabouts. Speak to a couple of lawyers until you get your price and what it would be. And then the stamp duty or additional dwelling supplement is a percentage of the purchase price depending where you're buying in the UK. If you're buying, in Scotland as an example, it's 6%. If you're buying in England, it's 4%. right? So just keeping that in mind. But now you know your numbers. So you've got all your acquisition costs, and now all you need to think about is, did you buy at discount? Have you added value for the refurb that you're going to do? And by doing that, you're able to refinance to pull your money back out of that property deal, which means that you've got no capital at risk. If you leave some money in the deal for whatever reason, then you need to make sure that you're comfortable and happy with that, because when you leave money in that property, then it's your capital at risk. So the game plan should be to buy that property at discount, add enough value so that when you refinance that property, you're able to pull your money out. But you keep the property, you keep the equity, and you keep the income it produces, which means it does not matter what happens in the market. If property prices start to go down for whatever reason, because that's what happens over the long term, you have recessions as well as upward markets. And as the market then corrects itself and goes down a little bit, it does not matter for you for two reasons. One, all your capital is back out, going to work in another property transaction. And two, the mortgage that you have, which will likely be on an interest only, is being serviced by the tenant who's paying the rent. So the rent pays the mortgage and gives you an income. The capital that you put in to buy that property is already back out. Get into property number two in this example. And this is why it's very difficult to go wrong when it comes to property if you keep to the fundamentals. Don't get caught up with buying over market value, buying property that's got no value to be added, and making sure that you've got strong cash flow and you're able to refinance and pull all your money out. Now you're being an intelligent investor, not taking big high risks like a lot of people do with alternative volatile investments out there. You're doing things intelligently, and if you do them, only adding one property to your portfolio every year, let's say, in the next 10 years, you're going to have a property portfolio that far exceeds £1 million. It's going to have more than £250,000 of equity, because there'll be 25% equity in there. And there's probably going to be in the region of between 35 and 40k net income coming in every single year, whether you're working or not. Think about that. This is how you really start to build some serious wealth. And this is why investing in property is a great thing if done right. And as always, when I'm putting out these videos, my goal is to educate, support, and help you in your own property journey as well as build a property business so you're doing things intelligently where you're making money. That's the key here. So make sure you subscribe to my channel, hit that notification bell to be notified when I drop more content. It's going to help you on your journey going forward. So all the best, and bye for now.